So I did make a purchase today of one of my high yield ETFs, and I'm going to go over that, but I also want to explain why I continue to buy these high yield ETFs, even though some people are bailing on these high yield ETFs. But I want to explain my reason of why I continue to buy into these and what my overall goal is. Hello my friends, this is Legend. So today I did purchase a little bit more of one of these high yield ETFs, and we're going to take a look at that one. So let's just go over to the stock chart and check it out. And here we are. I bought into HOOY. And why did I buy HOOY? Well, because if you look, we had a pretty big pullback today. We were up yesterday, but you can see we had a pretty big pullback today. It did end up closing at 45.42. And you can notice it's at the bottom of the Bollinger Band, and that RSI 2 is under 10. It's sitting at 9.72, and that's at that 45.42 close. It ended up dropping almost $3 today. Whew, wow. But since on my stock tracker sheet, you can see it is red because it did make that big drop. That tells me, okay, if I do buy shares, it will lower my price. So that's my first thing that I'm going to notice and look at. And therefore, since it is red, that tells me to plug it into the chart and let's see what it looks like. And the ones that are red, besides HOOY, is SMCY, ULTY, and CONY. And those three here have been red along with HOOY. HOOY was just flip-flopping back and forth a little bit because I was right there on the line. It did drop $3 today, so that definitely brought it on down. But what did that do for me? That gave me a buying opportunity. But you can see on the rest of them here, they're all green. All of them are green outside of those four. And HOOY was green yesterday, but after that $3 drop, it did turn red. But I took advantage of it. So I flipped the script on that one. I ended up using that drop in the price to, number one, get me more shares, and number two, lower that real price per share, so that when HOOY moves back up to that $47, $48, $49, or whatever, I then will still be green at that point. And after each distribution, I will continue to lower that real price per share, which continues to increase that gap between it. So when HOOY does another $3 drop after several distributions, I can stay green at that point, because my goal is to get that real price per share down, utilizing the distributions and buying those shares when they're under my real price per share and when it's at the bottom of the Bollinger Band and that RSI 2 is under 10. So when all three of those match up, I'm more in line to want to buy. And that's what I did today. So I did buy HOOY, and let's just plug into the little calculator we got right here, and I'll just slide it right over. And you can see right here, it's the real price per share calculator. And what it does is it gives you an idea of what that real price per share will be if you do purchase those shares at a given price. Now remember, my current real price per share is $48.58. And the current price, or the closing price of HOOY for today, is $45.42. So on the calculator here, just do the drop down, then you go through and you select the one you want to evaluate. And we were looking at HOOY. And the buy price that I did get these at was 45.36. And when we get back to the charts, I'll pull up the order and prove that I did buy them at 45.36, just in case some of the people think that I'm just making up the numbers, right? Now, how many shares did I end up purchasing at that 45.36? Well, I ended up getting 20 shares. So how much did I end up spending? Well, that was about $907, okay? So that was a nice chunk of money. But what did it drop my real price per share to? it's going to take it down to 47.87. So we went from that 48.58 down to 47.87, and that current price being 45.42 just gets me closer to that current price. And then of course, when that price does move back up, then I'll be setting at an even better position. Now with that real price per share after that purchase taking me down to 47.87, and looking at the stock chart here, turning off the moving average, you can see that the middle of that Bollinger Band, you can see what that number is, and that number is right here, okay? It's right there on the chart, and if I hover over the last point, 47.44. So I am very close to right there in the midpoint of that Bollinger Band. So I am keeping my price within this area. Can't always do that, but with that purchase, it did take me from the top area of that Bollinger Band down to the midpoint of that Bollinger Band. And that's not even counting the distribution that we will get paid out on Friday. But I'll update all of that information this weekend, and we'll see where that takes that real price per share down to. Now, we still got one more day of trading, and you can see even in the overnight hours, we're sitting at $46. So it's already gone up 58 cents. Now, of course, that is overnight hours. Come the morning, this thing could open up at $45, right? It could just drop, or it could continue to move up. You just never know, but that's why I continue to do what I can to lower my adjusted average so that when it does move back up, it's got a less of a distance to move before it crosses over my adjusted average. Because if I don't purchase more shares, then I'm going to get stuck way up here, and it's never going to get positive, right? And my whole goal is to get these things paid off, because if I can get these paid off, then I can still have the shares, but I have no money invested into that stock or ETF. I just have shares that are free, and they are paying me a distribution. I know there's several people out there who have already done that with a few of these, right? Some of the people got into NVDY when it first came out. I'm sure it's paid for itself twice over, right along with some of these other ones. And you can see, I do track this number right down here at the bottom. And what that number tells you is that is the number of estimated distributions before it gets paid off. And what does paid off mean? Well, paid off means I've earned more in distributions than I had invested. And you can see on PLTY, I only have 3 more estimated distributions before I get this one paid off. Because in total distributions, I've earned about $2,181. And how much do I have invested? $2,244. So this one here, I am almost paid off. And once it is paid off, I then have all of my original invested money back in my pocket doing whatever I want to do with it, right? And I've been getting it back over time. So it's not just sitting there. I'm reinvesting it into other stocks, ETFs, so it's working for me. So just over a period of time, PLTY will end up paying me back all of my invested capital. And then, like I said, I would still have the same number of shares. The only difference is I would have no money invested, and that's none of my money invested into PLTY. It will all be, in a sense, YMAX money. And what does that do for me? Well, that means that every distribution that I get from there on out is just free money coming in my pocket. It's no different than just somebody walking up to me every week and handing me some money, because I don't have anything invested into it once it is paid off. And we can go straight to that individual sheet here. And this is where you would enter in your purchases and your distributions. And all of this gets pulled into that summary page. Now, I don't have many shares of PLTY. I could have had 3,000 shares of PLTY. It doesn't matter how many shares I had, right? because that's just a multiplier. If I would have multiplied each one of these share counts by 100, that would have been a lot of money invested. But the percentage that I've earned would be the same. As long as I continue to do exactly what I did following my method here, then I would be looking at the same situation of only needing about 3 more distributions. And that's using an average distribution of about 59 cents. So therefore, if it is lower than 59 cents, it might take a couple more distributions to get there, right? But on average, the estimated number of payouts is going to be about 3 more. So I feel pretty confident by the end of February at the latest, right? At the latest, I should have PLTY paid off, and then those distributions I am earning are just getting paid to me just for not selling the shares. Now, I could still turn around and sell the shares and make that price off the shares, and that would be a gain as well, right? Because I've earned back all of my capital through distributions here. So either way, it's a win for me. But for me, I'm not going to sell it. I'm just going to sit there and let it pay me every week. And I'm just going to sit back and collect that passive income. Now going back to my chart right here, we can go to that order just to show you that I did make that purchase on HOOY. And here's that order. There it is. HOOY, I bought it 20 shares at $45.36 and it was filled. So therefore I do own those shares at that price. So that quantity and price I entered into that calculator is correct. So I kind of hinted around why I continued to buy these, right? Because I want to get them paid off and I want them to pay me whatever distribution it's going to pay me. Because at that point, I have no money invested and it's just free money coming into my account that I can use to purchase more shares of anything. Because that is weekly money. As of right now, that's weekly money coming in that I can just redeploy. Now, if I sold out of HOOY and I bought into another stock, then I need that stock to move up. And then in order to make money off of that stock, I have to sell it, right? I can't just keep it and it give me or make me additional money. I have to sell it to capture those gains, unless it's paying a dividend or a distribution. But if it's not, the only way I can actually lock in money is to sell it. And then I can use that new money to buy into something different, right? But that's what I like about these high yield ETFs, because I am looking to get it paid off. So it's paying itself off. And I'm also helping it out by buying shares when it's under my real price per share and whenever it meets my criteria for my buy, which is at the bottom of that Bollinger Band and under the 10 on the RSI2, which only helps to lower it even more and gets it down quicker. So it reduces the number of estimated payouts needed to get it paid off. Because the quicker I can get it paid off, the quicker I can get my money back, redeploy it into something different, and just let those distributions or dividends come in weekly. And that's fresh powder each week that I can use to buy other buy and hold stocks, ETFs. I can use them to buy or even use them to cover cash secured puts or whatever I want to use that money for. You've got to have some kind of money, and that's new money coming into the account so that you can continue to buy stocks and ETFs that you decide to buy to help increase your account. Now, I do have plenty of stocks that I do buy and I do sell those, right? I do swing trade a lot of these. I have some leaps, and right now I'm playing around with some bear call spreads. I'm just paper trading those at the moment because that does take a margin account. And currently I only have a cash account and I have my IRA account. Now, my IRA account is what I do most of these high yield ETFs in so that I don't have to worry about the tax side of things at the moment. But by continually to buy these ETFs when they do drop and not necessarily buying it every time that it goes down in price, but having an idea of when you want to buy it. What is the criteria of your purchases, right? What does it have to hit to make that purchase? And for me, it's that Bollinger Band and it's the RSI 2. If it meets those and in my spreadsheet, it's red, then those things tell me it might be time to purchase some shares to help lower this while the price is down. Because if I can get it down close to that price, when that price moves on up and it's still paying those distributions, I'm moving mine on down while it's moving up or going sideways. I'm continually to move down so that when that decides to actually move down a little bit, well, I've got a good amount of buffer between my real price per share and that actual market price. And that's why the ones you can see here that are green, that's why those are green, because I have continued to move that price down. As you can see, like on AMDY, my real price per share, $31.17. The current market price, $37.80. So even if it were to drop 10% and drop that $3, well, that's only going to take it down to 34. Well, I'm at 31. So even then, I'm still good and I still earn a distribution. So therefore, it just continues to move down. Same with YMAX, right? YMAX is now $10.06, but my adjusted price per share is $7.61. This one here can drop almost 30% and I would still be in the green. And that's because I'm not buying them if that current price is above my real price per share. Because if I did, then it would raise this real price per share and it's going to move it closer and closer to that market price. And then when that market price actually drops and say it does a 10% drop, then I could be at a point where all of a sudden now it's turning red, right? Because I might have moved my real price per share up to $9.50, right? And it's still at 10, so it's still green, but then it does a 10% drop and it drops down to $9. Well, my real price per share of $9.50 now turns red because I was buying above that adjusted price per share, so therefore it was raising it closer and closer to that market price. Well, I don't want to do that. I only want to move away from that market price. So that's why I only purchase if this is red, because that means that this price is indeed above that market price. And therefore, if I do purchase, that averages it down, and moving down is getting closer to that market price. So that when that market price does turn around or trade sideways, I can earn enough in distributions to bring it on down below that market price. And that's my goal. And as you can see, that is what is happening with all of these that are green. I have my real price per share and I've got the market price, right? On each one of these you can see my real price per share is under that market price. And that market price might have been coming down, but it's not affecting me, right? Because I continually to move it down. Now, that does not happen overnight. That's not going to happen in a week. It's not going to happen in a month, right? This takes some time and it takes some patience, especially when it's close and it starts flip-flopping back and forth, right? And that's what's happening right now with HOOY, and it was with DIVO as well. But currently, DIVO is above my real price per share, but I'm still very close to it, and I need DIVO to continue to move up. But we know, just looking at the charts, DIVO does want to move up and to the right. So for this one, that price appreciation should continue to move up and move away. And then as I earn those distributions, that will help to increase that gap between the two. So even though CONY, ULTY, and SMCY are red, I did not purchase those. Because as you can see, here's CONY, and CONY did drop down, right? It actually had a pretty good drop. And if it continued to drop, I might have actually been able to purchase more shares of CONY today as well. But you can see that RSI2, it's at 18. So it's not below 10. It is on the bottom half of that Bollinger Band, but it's not under 10. And then on ULTY, you can see we're actually on the top half of that Bollinger Band. So that one is a hold for me. And since it's not at the bottom half of that Bollinger Band, I don't even have to worry about where that RSI2 is. And then SMCY. And for SMCY, I did purchase the last 2 days because we had that big pullback right here at the bottom of the Bollinger Band, and it was under 10 right here. It was at 6.7. And then yesterday, it was still at the bottom of the Bollinger Band, and it was still under 10 on that RSI2. It was at 4.4. So I purchased shares both those days. But for today, we had a move up, and that RSI2 is up. So I did not purchase, even though it is still technically under that midpoint. But I don't normally like to buy when it's moving up. I kind of rather buy if it's moving down because I want to try to get it at a low point so that whenever it does move up, I've already averaged my adjusted average price per share down as much as I could at that point. So therefore, as this moves up, it's got less to move before it moves up and hopefully passes my adjusted average. So both of those days right there helped to lower my average. Right? So if my average was something like, say, here, then I made those purchases, it's going to move it down, right? And then the next purchase, it moves it down. So each time I'm moving it down and I'm moving it down and I'm moving it down, right? And then you get a day like this and it shoots right past your adjusted average. And then all of a sudden, your stock tracker sheet shows you green. Now, you are very close to it, so it may go ahead and start flipping back and forth from red to green. But that's okay. That just means that you're right there on it, and it could move on down more, and maybe it gives you another opportunity to buy more, and maybe you do and maybe you don't. You have to make those decisions, as this is not financial advice. But for me, if it is on the bottom half of that Bollinger Band, preferably at the bottom of the Bollinger Band, and that RSI2 is under 10, and on my stock tracker sheet, that is a red cell, then I am looking to possibly buy more shares because my goal is to get it paid off. And by buying those shares to lower that real price per share is only going to help to reduce that estimated time needed to get it paid off. So I hope you kind of understand why I'm doing what I'm doing. Right? On HOOY, why did I end up buying it? Well, because I needed to lower my average and I purchased it because it was under that bottom half of that Bollinger Band and that RSI2 was under 10, which helped me to decide to make that purchase. Now, of course, none of this is to make you feel like you need to purchase or that you should purchase or that you should get into any stocks, whether it's high yield stocks, whether it's a quote safe stock. That is your decision. Do your own homework, as it is your money that you're putting up and it's your money that you could lose. But for me, that's my method. That's my strategy, and I'm sticking to it, even though I see a lot of people just deciding to close out, whether it's at a loss or a gain. But for me, I think I've been pretty clear on what my strategy is, what my goal is, and that I'm looking for these to get paid off and just pay me a distribution from now until. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button. It would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.